Hello and welcome to Yadnya Investment Academy. In this video, we are going to discuss about treasury bills, also called as T-bills. We will discuss about the features, types of T-bills, participants, and the importance of these debt instruments. Treasury bills are basically instruments for short-term borrowing by the central government. They have the maturities of less than 1 year and are part of money market in India. Let's directly go to features of these treasury bills or T-bills. First is only central government can issue these T-bills. They are used by government to manage their short-term liquidity. These bills have assured yield and negligible risk of default, as obviously they are government-backed securities. T-bills are issued in primary auction conducted by RBI on behalf of Government of India. So RBI takes all the operations part of T-bills. Treasury bills are issued at a discount and are redeemed at par. The difference is the interest to the investor in these bills. For example, rupees 191 day treasury bill will be suppose issued at discount at rupees 98.2. After maturity, investor will get rupees 100 as maturity value of each bill. So rupees 1.8 will be the interest earned. This discount rate or interest rate is market driven and is decided in the scheduled auction done by RBI. Now there are various type of T-bills. At present, the Government of India issues 3 types of treasury bills through auctions, namely 91 day, 182 day and 364 day. There are no treasury bills issued by state governments. While 91 day T-bills are auctioned every week on Wednesdays, 182 day and 364 day T-bills are auctioned every alternate week on Wednesdays. RBI issues a quarterly calendar of T-bill auctions which is available at their website. There are 14-day intermediate treasury bills as well, which are sold only to state governments, foreign central banks and some other specialized bodies. These bills do not have any fixed periodicity of issue and are mostly issued in non-competitive way or without an auction where interest rates are fixed by RBI. These bills are intermediate by nature as these are liquidated mainly to replenish shortfall in the daily minimum cash balances of various state governments. Now let's discuss in brief about how treasury bills are purchased. T-bills auctions are held on negotiated dealing system, that is NDS, managed by CCIL, that is Clearing Corporation of India, and the members of this system electronically submit their bids on this system. For example, here the investor has bid at this price with expectation of 7% yield from these T-bills, but in the end the offer price which came in auction was less than the bid and hence investor wouldn't be able to get the required securities. Now few participants here are lucky, such as provident funds. They can participate in all T-bill auctions either as competitive bidders or as non-competitive bidders as well. Now participation as non-competitive bidders means that provident funds need not quote the price at which they desire to buy these bills. RBI allots bids to non-competitive bidders at the weighted average price of the competitive bids accepted in the auction. Allocations to non-competitive bidders are in addition to the amount notified for sale. Now here is a screenshot of recent auction of 91 day treasury bill on January 24th. Rupees 7,000 crore worth of 91 day T-bills were notified to be sold and bids worth 31,679 crores were received by RBI by 52 members, where the cutoff price was kept at 98.43, which means yield of 6.39%. So out of 52 member bids, 37 members were above the cutoff price and got the notified rupees 7,000 crores. Now there were 4 non-competitive bids as well, which were outside the initial notification of rupees 7,000 crores and entertained by RBI by 100%. These are the participants in treasury bill markets: banks, primary dealers such as DFHI, mutual funds, insurance companies, institutional investors, FIIs, corporates, and individuals too. Yes, individuals having demat account can also buy T-bills through non-competitive bids or through secondary market. This was started in August 2016 only. Now, treasury bills are not bought back by the RBI before maturity. Similarly, except at the fortnight auctions, these cannot be purchased from the RBI. So DFHI, which is a primary dealer in money market, fills this gap by buying and selling these bills in the secondary market. And that is what its primary objective is. That is to be the market maker in money market instruments and increase their liquidity in the secondary market. Presence of DFHI in the secondary market has facilitated corporate entities, mutual funds, and other bodies to invest their short-term surpluses in T-bills and other money market instruments and to encash them whenever necessary. Now this picture here shows the latest ownership pattern of all the different T-bills by various participants on November 24th, 2017. Clearly, 91 T-bills are majorly owned by state governments and other players. Banks and primary dealers are major holder of 182-day T-bills. State government own very few 364 T-bills and it is distributed well among other players, whereas 14 days intermediate bills are almost all owned by various state governments. Now let's discuss about the importance of these treasury bills. First is safety. Investments in treasury bills are highly safe since the payment of interest and repayment of principal are assured by the government. They carry zero default risk since they are issued by RBI on the behalf of central government. Second is liquidity. Investments in treasury bills are highly liquid because they can be converted into cash at any time. DFHI, which is a primary dealer, announces daily buying and selling rates for treasury bills. They can be discounted with the RBI and further refinance facility is available from RBI against these treasury bills. Hence, there is a good secondary market for treasury bills. They are a very good short-term investments. Corporates and other entities' idle cash can be profitably invested for a very short period in treasury bills. Financial institutions can employ their surplus funds on any day. Yield on treasury bills are also assured. T-bills are available periodically through auctions. They are also available in the secondary market. Fund managers of financial institutions build their portfolio of T-bills in such a way that dates of maturity of T-bills may be matched with the dates of their payments on various liabilities. Thus, due to their liquidity and easy availability, it helps financial managers to manage their funds effectively and profitably. Treasury bills help in SLR requirements as well. As per the RBI directives, commercial banks have to maintain SLR, and for measuring this ratio, investments in treasury bills are taken into account. For more details on SLR, we have a separate video on this. Treasury bills are eligible securities for SLR purposes. Moreover, to maintain CRR, treasury bills are also very helpful. They can be readily converted into cash and thereby CRR can be maintained. T-bills are a very good source of short-term funds for the government. They can raise short-term funds for meeting its temporary budget deficits through the issue of treasury bills. It is a source of cheap finance to the government since the discount rates are mostly very low. Treasury bills enable the government and RBI to support its monetary policy in the economy as well. For example, if there is excess liquidity in the economy, it can be absorbed through the issue of more treasury bills. Treasury bills can be used as a good hedge against heavy interest rate fluctuations in the call money market. When the call rates are very high, money can be raised quickly against treasury bills and invested in the call money market and vice versa, which basically calibrates both call money markets and treasury bill rates. Treasury bills are also eligible for repos, that means they can be used as repo collaterals. That is all we have on this topic. If you have any question on treasury bills, please do write in the comment section below and do not forget to subscribe to our channels for more such videos. Have a great time ahead. Jai Hind.